Well, hello and welcome to Moneycontrol. You're watching the opening bell and I'm your host, Nickey Mirchandani. Well, Indian equity markets are set for a stable start, recovering some amount of lost ground in the action-packed week. GIFT Nifty hints at a positive start coming in for the Dalal Street. However, US stocks ended mixed on Friday, losing the momentum as investors digested a hectic week of mixed earnings and also economic data that seemed to support the higher for longer interest rate scenario. Asian markets somewhat mixed on Middle East tension, along with that central bank meetings which are expected to take place. The Fed meeting at least is expected to take place on Thursday. All eyes would be on that one. FIIs at this point of time continue to be sellers. They sold equities to an extent of 1,500 crore and DIIs have sold in, or beg your pardon, have bought in equities to an extent of 313 odd crore. Now, what we have in terms of the FIIQs and the FNO space, that remains to be seen, because we're seeing some amount of sell-off coming in by the foreign institutional investors in the index futures, options and Bank Nifty options. There have been buyers in stock futures and Bank Nifty futures, but overall, the net short position of FIIs have increased from 1.52 lakh crore on Thursday to 1.53 lakh crore on Friday. In terms of option queues, 0.96 compares to that of 0.82. The put call ratio, or the sentiment indicator rather. Earnings to be watched out for. You would be having UPL, DLF, TVS Motor Company, Adani Green, Marico, APL Apollo Tubes, Blue Star, Castrol India, Craftsman's Automation, GMR Airports are some of them, along with KPIT Technologies, which will be in focus ahead of their quarterly earnings on October 30. But let's discuss the trade setup, strategies for the day, along with Prashant Sawant, who's the founder of Catalyst Wealth. Morning there. What's the trade setup looking like? It looks like a key day. RIL has come out with decent set of numbers. EBITDA has been more or less what the street was estimating. There's a huge drive which is coming from Jio or retail business. How does it look on charts and your strategy for both Nifty and Bank Nifty?
Hey, good morning to Nicky and good morning to all the viewers. So I think we had a very, very volatile week last, and I think when we met on Monday, I had a slightly negative view. Now I think we are consolidating. We are near a very major support. If I talk about Nifty spot, I think we are just hovering above the crucial level of 19,000, and the pre-open is more or less flat. I think the prices have also settled down. So I think now the major make or break level for Nifty will continue to stay as 18,850, which is say around 150 points from here. That would be a major support on closing basis. As far as the resistance is concerned, I think we can expect a rally to somewhere around 19,200, 250. I've heard a lot of people talk about new high. I would say be cautious of that. Don't fall into that trap. We need to go level to level. So 19,200, 250 is a major resistance from here, where I think previously it was a major support. So once we rally to that level, I think we can see a lot of selling. So we need to be cautious around that level. So for now, I'm looking at a bracketed or a range bound market from around 18,850, 900 to 19,250 for this entire week. If we break out of the range on either side, then we may see a big move. And most probably, more often than not, it would be better to see it on the upper side, because I think the consolidation on the lower side has been fair enough, has been decent. 18,800, 850 has been tested. So I think the rally, if we see volumes now picking up in the next couple of days, and I think with the Fed policy coming in, there would be volatility till tomorrow. From Wednesday, we should be seeing a one-sided. So that's my view on Nifty. As far as Bank Nifty is concerned, I think HDFC Bank has been a completely lackluster stock in this index. It is a leading one, major contributor. So the index has shown far, far more weakness as compared to Nifty. And even today in the pre-open, we are looking at an opening which is slightly negative and hovering around 42,700 levels. I think 42,400 to 42,000 is a major support for Bank Nifty on closing basis. And any rally to 43,000, 43,200 will face a stiff resistance. So I think we should not trade on Bank Nifty, just leave it for some time, unless and until we see a strong closing above 43,200, 300 zones. For now, I think the index to watch out for would be Nifty. It's a good bracketed zone, and I think we can target levels around 19,250.
Right, like targeting the levels of 19,250 ahead of the Fed policy meeting. That's perhaps a bit of caution that one has to undertake. But also do bear in mind the fact that L&T will be reporting in the numbers tomorrow. That's going to be a proxy of India's economy and perhaps the most important parameter that you need to watch out for in this earnings season. But how is the start really stacking up? All eyes will be on that. Will further recovery be seen today? That remains the key. But overall, global cues at this point of time are mixed. Asian shares are mixed. US market ended lower. GIFT Nifty, however, is suggesting off a positive start coming in for the markets. Remains to be seen if we are looking at a positive start coming in for the Wall Street. More losses can be recouped or no. That is the one that we need to watch out for. And yes, we are looking at some amount of, let's just say, it is a stable or a positive start, flat start with some amount of positive bias out there. 19,050, flirting around with that level, but about that 19,000 mark. Well, it has chipped in a little bit of red. It is a flat start overall. Remains to be seen in which, direction does the market really help. But let's look at RIL before we go on to Bank Nifty and then look at broader counterparts because it's an index heavyweight, a sector in itself. Reliance right now is doing well and is up with gains of close to 1%. So that's the one perhaps which is helping the market sentiment at this point of time. We are also going to be looking at IDFC Bank, which perhaps Prashant was talking about. Let's look at Bank Nifty index just to see how is that stacking up. Well, a bit of HDFC Bank right now is trading a bit lower. Let's look at Bank Nifty just to see how is the momentum stacking up. Well, we're seeing losses creeping in. Clearly, the index which is dragging down the markets lower at this point of time. Let's also talk about the other sectoral indices that we have. IT perhaps seems to be the one which has caught in some amount of traction. Mid-cap index, well, a bit of selling pressure continues even for the broader counterparts there. 0.1% of losses coming in for the mid-cap index, and the small cap right now has been an outperformer to an extent of 0.2% out there. In terms of sectoral indices, just to see how is it the chart looking like, we are witnessing some amount of selling pressure coming in for the IT basket. And in terms of other sectoral indices that we have, in terms of pharma, well, a bit of flat trend there with negative bias. And along with that, also, let's look at FMCG. Well, it is down and out with losses to an extent of 0.5% out there. Metal index, let's pull that up. Well, it gains to an extent of 0.1%. It's rather a lackluster day. Let's look at the top gainers and the top losers that we have just to see where the trend is exactly. Reliance is the top gainer. Clearly, some amount of support has been tripped in, and we're going to be talking about it enough and more. BPCL is another one for you, which reported good set of numbers. H2 seems to be a bit of an issue for this one, but Hindalco, another top gainer there for you. Apart from that, we're also looking at Cipla, Ultratech Cement, which is declared in their capex plan, and Eicher Motors. These are some of the other top gainers that we have on the list right now. Top losers, let's look at these stock. How are they stacking up? Well, the list needs to be updated, and right now we are looking at some of the gainers that we have on the screen. But right now, clearly, it is somewhat a flat start with negative bias. Remains to be seen how the direction is stacking up for the day. RIL seems to be lending in some support. But let's go back to Prashant and check with him. What does he make out of the start, which is flirting around that 19,050 mark, a flat start like perhaps we were anticipating. RIL is the one which is lending some support. Your recommendation on that one?
So I think, Nickey, just like we discussed, Bank Nifty has been extremely sluggish right from the opening, and Nifty is trying to protect that 19,000 crucial level. As far as Reliance is concerned, I think it is showing strength right from the opening. And another stock which I think is consolidated well is DLF. So I think we can focus on this. Even ONGC looks good, but I think Reliance has to lead the way today for Nifty to make any sizable impact. So if you look at the current price, it's around 2290. If we continue to trade about 2300 and close above that, I think then we might see Reliance out of the woods slightly and expect a 4 to 5% move, taking us to around 2350, 2360 levels. Overall, I think it would be a make or break stock for the index. And as I discussed about HDFC Bank, I think the opening also has been sluggish for the week, more or less flat. But Bank Nifty, I think, looks far, far more weaker than Nifty.
All right. Let me quickly address in stocks and news, Prashant. Please stay on with us. We are again going to come back to you, apparently, to check with the charts level for BPCL, because that's also one of the top gainers that we have on Nifty 50 index. RIL, there is a consolidated net profit which is inched up by 30%. The growth has come in from the stocks and news, essentially RIL, where we're looking at the growth despite a dip in revenue from oil to chemical business. There is a solid performance coming in from retail, Jio, and upstream business. These are the three segments which has essentially aided the bottom line performance of the company. The retail segment seems to be improving. Jio has witnessed rather healthy subscriber addition. There is a solid refinery margin, but that to an extent has been partially offset by a decline in Petchem. The capex is steady at this point of time, and the net debt level has fallen. Most of the brokerages across have maintained their buy rating, while suggesting that the risk-reward ratio for RIL remains to be attractive. On calendar year-to-date basis, the stock has fallen 3%, while Nifty is down by almost a big amount as compared to RIL. So, a bit of resilience coming in on that large cap front. Reliance Jio, another one that you need to keep an eye out on. Jio Financial Services, where, Reliance Jio, at least the earnings have been up by 3%, EBITDA is up by 3%, the margins have been steadied around that 52.3% mark. BPCL, that's another one for you, and is also one of the top gainers that we have. It's better than what the street was estimating, no doubt, and hence you see that performance coming in. It's led by the refining segment margins. Marketing margins to an extent were weak. But in terms of the commentary, the company expects a bit of volatility to creep in, or rather just say the brokerages expect some volatility to creep in the second half of the financial year due to the state and national election, which to an extent may bar or have some bearing on the retail fuel price hikes and the pricing power put together, which may impact the financials. IDFC First Bank, pull that up for us. Net profitability is up 35%, NIIs have grown by 31%, and NPAs have come in at gross NPAs have come in at 2.11% as compared to 2.17% sequentially. A bit of improvement, strong performance on margin and volume growth, and the asset quality too has seen some amount of weakness, with gross slippages being higher sequentially. AU Small Finance Bank, another one that is there for you. The stock is down and out in trade by as much as 3%. AU Small Finance Bank, these small, particularly banks, aren't really doing too well in trade either. Well, we're seeing net profitability, which is up by 17%, NIIs, which have been up by 15%, and the NPAs, which have actually deteriorated from 1.76% in the previous quarter to 1.9% in this quarter. So a bit of hit on account of the asset quality performance, and you're seeing both of these stocks, that is AU Small Finance Bank and IDFC First Bank, not doing too well in trade. Apart from that, we have BEL. That's also the one where the numbers have rather come out well, and it's higher than expected EBITDA margin, which has been reported by the company, essentially due to rise, the lower cost of material. Dr. Reddy's Lab, another one for you, where US FDA has issued in Form 483 with 10 observation for the manufacturing facility in Hyderabad. This was conducted from October 19 to 27th. Right now, that is also witnessing some amount of selling pressure. Prashant, coming back to you, what do you make out of BPCL and essentially these small finance banks, something like in the like of AU Small Finance Bank, and apart from that, IDFC First Bank too?
So I think, Nickey, as far as BPCL is concerned, we are at a major level, which is 340. It's a big resistance. So if we manage to close above that today, I think for the week, we can see a decent pullback to 350, 355 odd levels. So I think I would be watchful today for a close above 340. And if I see the price hovering above 340, around 320, 315 p.m. today, I think I can be a buyer in it and look for targets around 355. I think in a choppy and volatile market, this would be a safer bet. As far as AU Bank is concerned, I think it had been a good performer a few months ago, but now it has broken down and it has completely what you call as a structural breakdown. So my suggestion would be, if someone is having a position in this, you need to strictly follow a stop loss of 660 on spot. If you see 660 breaking, you need to exit. Do not buy, do not try to catch the bottom. It is a structural breakdown and it is a volume back structural breakdown. So I would be cautious of this stock.
Okay, the other one that we really need to talk about is Cipla, which is likely to see on some following buying, and that is also the case where the companies increased their EBITDA margin guidance to 23 to 24% with a higher end bias from 23%, and it plans to launch in more products in at least semaglutide in India in oral form and may explore more injectables. That's apparently the one. The revised guidance is working well in the favor of Cipla. What do you make out of it, Prashant? Would you recommend buy at these levels?
So I think Cipla, from an investor perspective, has been a very I would say, investor-friendly stock. The volatility that we saw in the past few days or weeks was mainly hovering around the news of stake sale. I think once we get more clarity around that, these stocks should do fairly well. Even now at this level, I think one can start adding, and you can maintain a stop loss of somewhere around 1175 spot. We are currently around 1200, 1210. I think that would be a fair amount of risk to get into this. And if the stock picks up, as I said, if we get more clarity around the stake sale, I think we can start capturing the levels around 1250, 1260 as well. So overall, a good base is formed. And I think from here, the chances of stock picking up are quite high.
Some of the other top losers that we have is Dr. Reddy, Infosys, Bajaj Finserv, Bajaj Finance, Britannia, Axis Bank and Kotak Bank. So you have a mix of essentially financials along with that of Dr. Reddy and IT. So a mixed bag of sorts. Coming back to you, Prashant, Bajaj Twins, what's your view out there? Because they are apparently exerting some amount of pressure in today's deal and down and out. Let's just say just lower by as much as 1% in early deals. What do you make out of it?
So I've been observing Bajaj Finance for the past couple of days, and what I've seen is whenever it's trying to go to higher levels, there has been a stiff selling, a strong selling. So I think one needs to maintain a strict stop loss here. It is at a major support. The support is around 7,300, 350. So we are just around 1% high from that. So if we have positions in Bajaj Finance, I think one needs to follow a stop loss of 7,300 and hold. I would wait to enter fresh longs. I would wait. I would love to see a closing above 7,450, 7,475 to get more conviction on the price and the stock.
Sure. Any other two recommendations that you'd like to talk about, Prashant?
So I think one stock and one sector which really I think has formed a base and may pick up from here is the PSU banking index. So I think we already saw a good move in Canara Bank. In fact, a very strong move on Friday. And the next stock, which I think is very near to a base, is State Bank of India (SBI). So if you look at it, it's currently around 558, 560 zones. I think one can start accumulating with a stop loss around 545, 548, and keep adding at lower levels. From here, once the PSU sector picks up, I think we can easily capture levels around 575, 580. So I think in a weaker market, it would be better to add stocks which may outperform later on.
All right, Prashant, thank you for those recommendations and views. We're completely out of time on this, at least the technical side. Thank you so much for taking out the time and joining us. All right, let's navigate our discussion now towards the fundamental side of the story. Mayuresh Joshi, who heads the equity research at William O'Neill Company, joins us to take this forward. Morning there. What do you make out of RIL numbers? Clearly, it's been one of the stock which has been supporting the market. That's one. You have the Fed policy rate, which is apparently lined up for the week. That's second. A bit of escalation on the geopolitical concerns, perhaps third. What do you think markets are, they're probably inching higher towards recovery, or what one is expected to see some amount of more caution or consolidation setting into the markets?
Morning, Nickey. Always a pleasure to be on your show. So I think I'll go with the cocktail of global events that is probably happening. And as you rightly pointed out, the geopolitical escalation that we are probably witnessing at this juncture is going to keep equity risk assets across the globe on tenterhooks. And therefore, you are going to see periods and bouts of volatility across global markets. The second element in terms of the slew of economic data coming in from the US market, albeit positively rather than negatively, but the markets would probably see this print, specifically the GDP print, which came on Friday, as a past of the past quarter. And therefore, the actions that the Fed has taken and what kind of policy actions will take place, whether you want to see one more hike coming in and the soft recession probably expected in the US impacting earnings, probably getting reflected in terms of the bond yields exceeding 5% as far as the 10-year is concerned. Add to that, our local state elections over the next few weeks is also going to keep the markets, at least at the local level, on tenterhooks as well in terms of what probably comes out of that. But generally, I think if you probably look at the economic data points as far as India is concerned, both from a macro and a micro scale as far as earnings are concerned, still stands out. However, I think in view of what global uncertainties we are facing, you're absolutely right that markets with India, we're probably looking at a consolidation phase. So we probably need to see how the markets react and whether that intermittent flow that we created around 18,800 If that's not probably breached and we get a nice follow-through action with a 1.5% move, probably the intermittent bottom might just sustain, at least in the Indian context. Having said that, I think when you're talking about Reliance numbers, I think it was a very good show on most counts. The O2C business did exceedingly well in spite of demand conditions being extremely tepid across the globe. And that is probably getting reflected both in terms of the product mix as well as the margins that they produced. Reliance Retail, one of the most astonishing performances, if I may call it, in this quarter. Store additions, you're seeing margin expansion that has happened. And in fact, this quarter did not even include the festivities. The festivities will come through in Q3. So that was a blockbuster show that retail produced. Jio, stable set of numbers, expecting more ARPU increases in the next few quarters in a calibrated way, which should boost bottom line and the cash flows. And oil and gas, obviously, I think the demand has been being very, very volatile through prices, gas prices as well. But GRM should be relatively better off. And with increasing volumes, it should offset the pain, if any, by input cost inflation that we probably see. So Reliance, better set of numbers. I think that is that stock, which is probably holding the Nifty up today.
Precisely. I mean, some amount of support which is clearly coming in from Reliance. But what we also want to focus on is completely two different tales by Cipla and Dr. Reddy's, the dichotomy of trend which has been witnessed by the pharma players. On one side, you have Cipla, which is apparently again have gone ahead and revised the EBITDA margin guidance for the financial year. And one, you have Dr. Reddy, which apparently is right now witnessing some amount of selling pressure, despite managing to report better than estimates number. How are you looking at these two counters? Cipla sits at a 1-year forward valuation of 25 times. What do you like within this space, and how are these two comparables according to you in your assessment?
So from a numbers perspective, Nickey, Cipla, outstanding set of numbers. And in fact, the margin guidance that they've upped 23 to 24% with the higher bias going towards 23 and 24 at the higher end of the range. I think that is a huge positive sign. Again, I think a couple of their blockbuster drugs which are expected specifically on the respiratory portfolio, if that probably get launched in the next few quarters, that will give an additional boost in terms of both the expected revenue numbers that come through at a global scale. And with an improving margin, the cash flows and bottom line growth should be stupendous. They've also upped the overall numbers as far as the US formulations is concerned. And that's a huge positive. Valuations, yes, higher end of their median range that they're probably trading at. But this is one stock that we've liked consistently over the last couple of quarters. We continue to like that and hold it in our global focus list as a clear disclaimer. Dr. Reddy's, decent set of numbers. In fact, most of their internal segments, including PSAI, has done relatively better. However, FDA concerns, which have now started cropping up again, is something that is weighing in on the stock more than the numbers. And for obvious reasons, if these concerns are to be believed and if they play out, the next few quarters might have subdued growth in terms of new launches and critical new launches, which are high margin products as well. So I think good set of numbers, but FDA concerns weighing in on Dr. Reddy's at this juncture. What we really like from the space, as I said, is Cipla and Sun Pharma as well, which is a unique specialty portfolio, which is going for them. And expectations are that the numbers should hold up in the next few quarters.
Mayuresh, the last question that I have for you is on BPCL. Apparently, the numbers have been decent, good show rather. EBITDA has been surpassed consensus estimates. But if you look at the H2 guidance which has come through, there is a bit of uncertainty in terms of the elections probably weighing down in terms of the pricing power capability of these players. With that in perspective, would you still be bullish on stocks like BPCL, HPCL? How are you viewing the entire basket right now?
So we've always been a little bit cautious, and you're absolutely right. I think the second half, with elections around the corner, both state and the general elections expected to come through. And the volatility that might be an upside risk as far as crude and gas pricing is concerned. If prices rise for geopolitical escalations and tensions thereof, the inability to probably pass them through is going to be very, very obvious because of elections around the corner. And therefore, I think a lot of this pain will be gestated on their individual balance sheets as well. And that is an upside risk that we probably see in terms of earnings, specifically in the second half. So these counters have always been prone to regulatory risk, government policies, so on and so forth. and therefore we shy away in terms of, at least at the PSU space, something to do with either downstream companies or even midstream companies for that matter. Because if the impact happens at the regulatory stroke government level as well, I think that impact has a huge blow as far as bottom line is concerned, and ultimately impacts earnings in a significant way as well.
All right, Mayuresh, thank you for taking out the time and joining us. We're just going to leave it at that. But we're going to be shifting our focus to primary markets, essentially. Cello World, a famous Indian consumer product company, is set to hit the Lal Street today with its initial public offering of nearly 1,900 crore. The book-built issue is nearly an offer for sale of around 2.93 crore shares. The issue opens for subscription on October 30 and closes on November 1st. The IPO price band is set at rupees 617 to 648 per share. The company essentially deals in three categories: writing instruments and stationery, that's one; molded furniture, second; and third is the consumer houseware and related products. Overall, owns around 13 manufacturing facilities across 5 locations in India. That's the word coming in for Cello World and the issue which opens for subscription today. But with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.